Hello to you. Well, it's Friday and it's time for another weekly Wealth Insight. I want to share with you a tool that most people don't know. In fact, I learned this from Dr. Hannes Dreyer back in 2002, and he said it's the best kept secret in the financial industry. It's called IRR, or internal rate of return. Now, what is it? Now, you would have seen, funny enough, on the picture of the screen, and I'll put a little picture again of the definition. Which, by the way, I was fairly good at maths, but even that confuses the living hell out of me. What about if I go and read the definition and I have to actually print it out because there's no ways I can remember this? The IRR of an investment or project is the annualized effective compounded return rate, or the rate of return when the net present value, NPV, of all cash flows, both positive and negative, from the investment is assumed to be equal to zero. Now, if you think that I was just talking in Mandarin, I probably was, because you've got no idea. 98% of you, 99% of you have got no idea what I've just said. So let's talk in simplification why the IRR is so powerful. The best part about IRR is that you don't have to be a financial genius. In fact, you can literally go on the internet, look at the link below, and you can literally work it out. There's 27 variables to the IRR. And again, you in the old days had to be a financial genius to go and figure it all out, and you had to go and build it. Even putting it on an Excel spreadsheet is quite hard. Trust me, I know, to go and figure it out. But nowadays with the internet, literally with ChatGPT, you can literally go and put in the numbers and it'll figure it out for you. Or the calculator that I've given you below. So why is it so powerful? In simple terms, it helps you compare apples, oranges, and bananas. So if you're investing in the stock market and you're earning a particular return, and you want to buy a property and you want to compare the stock market to the property, or you want to go and invest in gold, or you want to go and invest in crypto, whatever it is, whatever the financial asset, it's one calculation that allows you to literally do the maths and compare apples, oranges, and bananas. I'll give you a good example. So we just invested in an industrial deal in Phoenix, and it's got an IRR of 17%. So that means that in simple terms, it's the annual return. So it's in today's money, so not future return, in today's money. So it takes into account things like inflation, of 17% per year. Now, 17% per year is a very good return per year. It takes into account the income that you're going to earn from the property, and it takes into account the capital growth. And it gives you an overall return per year that you're going to get. So this property, this industrial property in Phoenix, is getting you 17%. I had someone in Johannesburg, South Africa, give me their property, and we did the analysis on their property. Now, their property is not cash flow positive. The one in America is cash flow positive. It's actually putting money in your pocket, whereas the one in South Africa is taking money out of your pocket. Plus, it's in a depreciating currency. And it's not my opinion, it's the maths. When you do the maths, the IRR is negative 65%. Now, I'm not going to lie, I was even quite surprised by it, and I've even asked two accountants to double check that, because it feels intuitively like it's too wrong the wrong way. But what I can safely say is that let's assume that it's even 50% wrong and that the IRR is minus 30%. You don't have to have even a matric in maths to know that you should be investing in an asset that's getting you a 17% positive return versus a negative return. And so what is the power of the IRR? Once you know how to do an IRR, once you know how to calculate an IRR, and most importantly, once you know what an IRR is, you can start to compare apples, oranges, and bananas. No longer can the financial industry or anyone, salesman, broker, anyone, financial analyst, anyone, hoodwink you, because it's simple. All you do is say, what is the IRR? And once you've got an IRR, you can literally compare anything to anything, and you can start to make the right decisions for yourself. If you click on the link below, you could also go and do Wealth Going Global. You could build an entire wealth plan. And ultimately, I believe that if you want to be successful, you've got to have a plan. When you have a plan, you'll have direction. So if your plan said that you need to earn an average IRR of 15%, and if you did that, you would be free in 10 years, then it becomes really simple. It doesn't matter what investments you look at. You've just got to make sure that they've got an IRR of 15%. And that's why I understood this literally 21 years ago from Dr. Hannes Dreyer, when he said it's the best kept secret in the financial industry. Today, I've shared that secret with you. Click on the links below. and you literally can unlock that secret for yourself. If you've got any questions, literally put comments down below and ask me any question. I've been doing this for 28 years. I want to share the knowledge with you. For us, it's all about empowering people. I'm sick and tired of people being disempowered, the 99%. Let's be empowered. Let's be like the top 1%. Let's have the knowledge and the confidence and also invest. So if you've got any questions, click, literally write them down below and I'll answer them each and every week with the Wealth Insight. If you enjoyed this, subscribe to the channel and share it with your friends. Our job, your job, is to make sure that we're all empowered so that we change from being victims to being captains of our own destiny when it comes to our finances. See you next week. Cheers.